Let's keep going. Hey guys, we're not sure. Attendance has been a little sketchy on things lately, and we certainly understand why.
Yeah.
We're going to give you an update today on what we have. We actually are trying to get our insurance people and lender people on, but I'm not sure. I think some of them are just getting their power back, so they probably are having to reboot stuff,
right.
and all of that. So,
but you do have the three of us.
You do.
You got
I mean, there's the plus. And you got Sheila over here.
Sheila is running the board.
She's running the show. She's running the show.
Byron's in Italy.
Byron is in Italy.
He evacuated Italy.
Right?
Which is completely fine because we're happy to have
Sheila. We are.
We upgraded. We upgraded.
Don't tell Byron we said it's an upgrade.
I'll keep all this our little secret.
Right.
So obviously we had the storms that came through. People are displaced at the moment. So but I just want to get on and talk about a couple housekeeping things before we get into it. I noticed we still have about 1,000, little over 1,000 listings on the market. It's great.
Pretty strong.
Yeah, we're still doing pretty strong. But I'm also noticing that some of the old listings that are on there still haven't been updated with a new modification.
Bernardo's here. Sorry.
Awesome. Welcome, Bernardo.
Hey, Bernardo.
So take a look at your listings. If you do have a listing out there that is older prior to August of this year, make sure you get the modification to the listing agreement taken care of, so that way you can bring your listing agreement into compliance with the NAR settlement. Also, any new listings or any active listings that they're still active. As of October 1st, we need to have that flood disclosure signed by the seller and sent out.
Yeah.
I don't believe in conspiracy theories, but obviously we just went through a couple storms, and we have a flood disclosure that has to go out.
Perfect timing with that state legislative flood disclosure.
Amazing.
Yeah.
And then, of course, the same thing with the condo rider. Condo rider was updated, so if you have any old listings that are condos that are still using the old condo rider and they're still active, please update that listing and use the new condo rider. Any new listings that come up for condos need to have the new condo rider. And then, of course, my last item here is if your license was supposed to expire as of September 30th, it was automatically extended to October 31st. Now that we've had a couple storms in the mix, it may get extended again, but as of right now, it's still October 31st. So please don't wait to the last minute. Get your CE done, log into the DDPR, and pay your renewal fee. So,
pay your dues.
While we're on housekeeping, guys, too, and I know there's just a handful of us on there, make sure you update your seller's disclosure after these storms, especially for anybody in those areas. Really do a thorough check. If you've got a little leak or something during these type of storms, you'll get a leak that will never happen again. Sometimes you've had sideways wind-driven rain for 8 hours on a certain location.
Right, could be sneaking on a window and it'll never happen again because it was just
pounded from the north for a long.
But if you disclose it, you won't get sued for it. So do a very thorough. You still might get sued, but you'll at least have a good defense.
But not for that.
Yeah, exactly. I tell agents all the time, you can sell a home with an unexploded World War II bomb under it as long as you disclose it, and you won't get sued for it. Bernardo's here probably going, don't tell me about those insurance issues. But,
right.
So we're glad to have Bernardo on. I'm sure you're going to have had a lot of issues. I know that personally, Bernardo has had property that you probably had to deal with as well. Huh, Bernardo?
I had the pleasure of having one flood 2 weeks ago, and then I had 3 of them that had damage, the minor, thank God, but damage from the last one. So the Milton damage was all $2,000, $3,000, $4,000 stuff. Not really worth filing a claim because the deductibles are usually 2% of the face value of the policy. An average probably around 6 to 10 grand. It's what most people are looking at. But the flood one, that was pretty catastrophic. I mean, we lost basically everything from 36 inches down, including Category 3 and so on. It is what it is. That's the cost of living in paradise, I guess. That's what I hear all the time.
Right.
There's a lot of people that got the same, I get the phone calls every day where, we get 3-4 feet of water in that home, and
what do we do?
Flooded. What do we do now?
What do
So
we do?
Yeah. We had a great run without any of those issues. So,
We so did. We had such a
Yeah.
great run.
I
so
think if we keep this in context, guys, I've been here my entire adult life. That's a long time. We had the two worst storms in my lifetime in Florida in our region back to back within 12 days of each other. So, if you're a gambling person, now's the time to go buy a waterfront home because what's the chances of it coming again? But these were two very different storms. People that don't live in Florida think a hurricane's a hurricane's a hurricane. We had with the one never even got within 100 miles of
we
us.
didn't even have Helene. We
Yeah.
had the storm
Yeah,
surge.
Helene never made impact there, as we all know, but the flood damage from it was
Catastrophic.
yeah,
really.
yeah. I'm thinking Naples to Citrus County at least. You saw those coastal communities on those zip codes. And if they were built prior to a certain date or not built up to code, they got water and they got issues. And it's going to not be a week or a month or a year recovering from this, guys. It's going to be a
Years.
while.
Yes.
It's going to be
years.
a
It's
while.
going to be years. I mean, I look at places like Gulfport and the beaches, and I just don't. It's going to be years. I don't know how those areas are going to come back. Not even only residential, but the businesses.
right.
Yeah.
It's just
Well,
it just breaks my heart.
what we're seeing down we're going to see it all over. But we did have one of our big producing agents talk to us about Shore Acres.
Yeah.
And she was just frustrated to know. And as we all know, John and Joanne live in Shore Acres, and nobody is above being affected by a storm. So John and Joanne were as well, and they've suffered through it. They're okay. Don't want anybody to think that they're in peril or anything, but they certainly have been displaced, and a lot of things going on with the storm. But Bernardo, we really want to get an appraiser on in conjunction with you. I will let you talk about the whole adjuster thing versus the public adjuster, and I wouldn't get a public adjuster involved until my own company's insurance. Their adjuster, I had a conflict with. That would be me personally, but I'll let you talk about that. But what we're seeing is there's people that have storm fatigue that are just leaving.
Yeah.
They're going to make a claim, get their insurance money, sell the property for the value of the property, the land that they can get, minus the raising cost of the existing structure. So we've had a lot of calls about agents going, how do I price this now? Well, that's a whole nother issue. Bernardo, I'm going to have you come on and talk about the claim and how that might work in the process of that. But then the last thing is, and we have Tina here to talk about it, we've been talking, what you're going to see is you've had this structure, this home that maybe wasn't built to today's current stone. We've been looking at some numbers prior to 1982,
Right.
which is a search criteria. If it was in the coastal community zip codes, it was built prior to 1982, never raised or brought up to current codes, it flooded pretty much. That would be a good place to start if I were looking for investor properties. Y'all listening? Because there's a lot of them out there, agents that want to work with you to find some of these homes. But so then we have a claim that's not going to make us whole on this property because, like Bernardo just said, most of them are coming into 36 inches. I've seen some that made it higher than that, up to about 48, but most of them are in the 24 to 12 to 36 inches. And the damage that they're going to see out of that. So the insurance company here is going to pay them to put it back the way it was. They're not going to pay them on this claim to get their house whole. A lot of agents are
To bring it up to code.
or to bring it up to code. A lot of customers are thinking, well, I'm just going to make a claim and they're going to give me all the money I need to make my house my dream house now. I don't think that's the case. So now you're still going to you got an existing mortgage that most people do. You're going to have to short sale that mortgage when you put your land under property, probably, is my guess, is where that's going. I think we're going to see a lot of that.
Yep.
So be prepared for that when you go out there and talk to people. There's a lot of moving parts. And Bernardo, what do you find with the insurance companies? Like, we've heard conflicting reports that if you make a claim on your property, you better still own that property when the claim is paid out, or you won't get it. We've heard some insurance companies like, that's ridiculous, we're going to pay you. Others have said that, no, you have to still own this home. So you may have to run your claim process through before you get the property sold. Bernardo, chime in.
Yeah, I mean, I don't think there's a firm rule that every company is going to stand by it. But normally it would be better to have ownership of the property as you're waiting to get compensated for the claim on it. I don't know how that affects title, Tina. If there's an open claim, does that affect title at all?
Well,
I know for getting new coverage.
Not essentially, because homeowners insurance is really not a title issue.
Right.
You know, like even on a cash transaction, we don't ever get involved. It's usually never on the settlement
Not
statement.
going to show up as a lien
not
or
gonna-
anything,
no,
or a
no.
cloud on the top.
But
Right,
that
right.
said, I mean,
But
I'm like,
a lot of these claims had notices of commencement filed because of the mitigation part of it, which is not the reconstruction. It's just basically to get stuff
Right.
out and then make sure they're going to collect on it. So those will have to get satisfied
so,
prior to
yes. So
closing.
that
Yeah.
in that case, yes, if there's a notice of commencement on the property at the time of the closing, and you're looking at just selling this house as is and not doing all the
Better
stuff you
close
want to
that
do,
out.
you better close out that. We're gonna have to close it out, which
Right.
means the contractor is gonna have to sign a form that says the work is done and paid for. Well, not yet, and the
Right, which means that
homeowner
they
is gonna sign the
have to write a check if
yes.
they haven't got anything
Yes.
from the insurance company yet.
Once in a great while, you'll find a contractor who will say, "Okay, we'll release it," and then the minute it sells, they'll put it back on. But it's to the
To the buyer.
it's going to be to the buyer, and that's not going to happen.
Can you get will your underwriting accept a agreement between the buyer and seller to take it as is? I guess the third party would have to be involved there. I mean, could we get a hold harmless possibly? Like, hey, there's an open
I
permit.
mean,
The seller
probably ask for a
claiming that-
holdback or something around those lines, but I don't know.
So, and I'll say this, you know, the majority of title companies have kind of steered away from escrow holdbacks. We'll do them. We do them. I
They're
mean,
not
we do,
fun.
but no, they're not fun, and we don't do them in abundance. But I would venture to guess that this is probably, excuse me, not something that the title companies are going to want to get majorly involved in.
Yeah.
Because there could be a
Yeah,
stack of
because
them, and
Yeah.
And you guys don't want to track that.
nope.
Well, you get in the middle.
Right.
Both sides are bickering at you to release the
Right.
money, and you're getting to play
Right.
judge, jury, and everything. It's not fun.
And most of the time, your escrow holdback agreement is for 30 days, and that is just not even fathomable.
Not even a
It-
dent on it.
Yeah, that's
Yeah.
not that's not
My-
happening.
My biggest advice right now is just to be calm, to
Yeah.
you know, be patient. Most of it. Document as much as you can. Take as many pictures as possible. Save every receipt, and then ask questions. Call your agent, call me, and if you have a particular question about it, there's a lot of tricky, questions out there. Some people assume that they can go stay at a hotel and that the insurance company will pay for, and that's usually true on homeowners claims, but that's not true on a flood claim. That's a big deal. So things like that, you just have to be very careful. I unfortunately have a client up in Dunedin that has a home that is about 100 years old. So obviously it was built, low, very, very nice home. And they just found out, I think yesterday or Monday actually, that the city of Dunedin is not going to allow them to fix it. They're going to make them tear it down because they're saying that their value is
50%.
basically the claim is going to exceed the 50% of the value of the property, of the replacement of the property. So in that particular case, that they're going to take a hit. They're going to take a big hit.
Heartbreaking.
So that brings up a really good point, because all municipalities aren't treating this the same with the FEMA rule. There are some of them, it's a 5-year, and the 50% every 5 years. Some it's 50% every year. There's a lot of moving parts going on here. So,
Yeah.
Largo might not be doing it like Clearwater. Clearwater might not be doing it like Dunedin. Dunedin might not be doing it like Pinellas County. So there's a lot of moving parts. Bernardo, the other thing I would ask you from the insurance standpoint about these emergency repairs that, like, we all know you really need to get the drywall out.
Right.
You really should get the drywall out. Hey, Michael, how
Hey,
are you?
Michael.
Thank you. I know you've been doing some good work out there. I've seen the work, man. You really busted it. So, So what I'm hearing, and I've been fortunate enough to go out and trying to get to some of our agents and check on them, doing welfare checks, and the ladies here and the company and John and Joanne personally have reached into their pocket. I know Michael has, and different people to help people out, and we really appreciate that. We've been taking them as much support as we can, but I'm hearing a lot of stories about them getting gouged and taken advantage of. My question to you, Will, how would you suggest that, they have these labor people coming by, they're desperate to get stuff out, but these are unlicensed unpermitted, work. I've even seen some municipalities say you got to have a permit to take drywall out, and others are like, "Are you ridiculous? Get the drywall out." So if you use somebody to rip out some carpet or some drywall or to do some of these temporary repairs, and they are just the neighbor's kid or something, how's that going to play out in your insurance claim, Bernardo?
The insurance companies, the flood insurance companies, are going to pay minimum wage. If that would most likely be considered the homeowner doing it. And
Okay.
I have been told that the way they calculate the reimbursement of that is they'll pay every person that was at the property doing it minimum wage, basically, for the work. So let's say my case, me and Julie and Natalia went over and we gutted half of the house on Sunday after the storm happened. They're going to multiply whatever, I think was $13 is the number that the insurance rep used. So they're going to pay us $36 for the 24 hours we stay there, breaking drywall and carrying it out. Now, you were saying that some municipalities and counties were actually asking for a permit to tear out the drywall. I learned that if the property is commercial, meaning it's 55 units or bigger, non-residential. Let's word it that way.
Yeah.
There is, and it's not a property that was built recently. And I don't know what the recently would be. I'm assuming 1978 is the cutoff point. They're having asbestos testing as a requirement before you can start messing around with the stuff with the drywall. So that held some units in our building back by almost 9 days. Now 9 days with 3 feet of water in it, you can imagine what a mess it became. So in our case, we're not going to get penalized for it because it is what it is. But when the professionals came in, they said we need to do this in order to be in compliance. And then we knew that it didn't. We had done asbestos testing in this particular property and a couple of units in the past, so we knew it wasn't present. But that's something that could come up. So I guess there's no real way to protect yourself against a lawsuit if someone gets hurt. Like if the neighbor kids are helping you out. Unfortunately, it's going to be one of those. It's if they're really there to help, they're not going to do it. But if you're hiring a professional to do it, and when I say a professional, you're hiring a company. It doesn't have to be a specific mitigation company, because right now there's bricklayers and painters and every type of trade in construction offering those services. You just want to make sure that they have a general liability and workers' comp. So if they do create damage to your property, or if they do worst part of it, if they do get hurt in it, you're not in the hook for for a workman's comp payment, basically. So it's tough. There's really no perfect scenarios right now. It's going to be kind of trial and error for a little bit.
Well, we as we talk to people, we had the same amount of contractors, subcontractors today as we did 4 weeks ago. The problem is we got 10 times, 1,000 times the amount of jobs out there right now. So the good, reputable, licensed people, come on, they're busy. I don't know how you're going to bump up in their timeline, because they've been doing it for 10, 20 years. They have a reputation. They have existing basic customers. Their phones blew up the day after Helene, let alone the day after Milton, to what's going on out there. So it is a tough situation. We are kind of, I don't know, correct me here if I'm wrong here, gang. We're outside of the emergency repair stuff for some people. Some people still don't have drywall out. Some people, as Tina was telling me, the Army Corps of Engineers is opening up their blue tarp brigade or whatever it's called. Find out how you can get that, because we haven't really had any rain since Milton, which was
we have a few days. Yeah,
and you're going to find out where those leaks are with a regular rain coming. And again, make sure you're updating all of those sellers' disclosures with everything you find out. So where would you weigh it out? Again, with commercial property, it's a different animal than residential property, but you got to balance out the need for getting some emergency temporary work done versus doing it with the right contractor. I think you're going to have to do it on a case-by-case basis and see what those needs are. You can't tell the little retired couple to not patch their roof or to get a blue tarp over it if that means even the guy driving around in the pickup truck with no signs on his truck's willing to do it for you.
Well, and the other thing to keep in mind too is there will be people, and I spoke with someone yesterday that just doesn't have any way to get things started. But she has to document her efforts of trying to mitigate the wet drywall and so on, because once the insurance company comes and there's more damage than it should be, and they look at it and they say, well, we haven't done anything, she needs to be able to show that she had, so many phone calls she made and so many people she tried to get over.
Gotcha.
Otherwise they may use that as an excuse to decline or minimize the
So they don't deny her a claim from ongoing damage
That's
because of the original damage.
Right. So let's say you call Paul Davis and all these dryout companies 100 times. Make sure you write down. Day one, call 5 times this, and this company. That way, if 10 days later when the adjuster comes and nothing has been done because no one called back, at least you're showing that you put effort into it, not just said, just let it be, kind of. So that's where documenting all the aspects of it is very important. So number one, you don't forget. Number two, you have something to show the adjuster, or if it goes into a public adjuster later or court later, okay, here's everything that happened. That's probably the biggest thing for the people that are still waiting to get stuff out of their house. I think is just making sure that they're on top of that.
A quick question for you. You may not be an answer, but I rent an office in a commercial building, and we got a lot of flood damage in here. But the landlord told the owner of this strip mall told my landlord he doesn't carry insurance on the inside of the units. He's only responsible for the outside and the roof. And then my landlord's insurance was denied yesterday. The claim, they have good insurance, but they said you have to go through the owner of the strip mall. So,
what kind of damage was it?
6 inches of sewage water went through the entire complex, and there's businesses that are still closed in here. There's only one open. It completely ruined the floor. It buckled the floor. Part of the roof caved in. But the landlord is saying he doesn't carry insurance on the inside. And then my landlord's insurance company, good policy, but they declined him completely yesterday.
Okay. Do you have your own insurance? Do you have a business owner's policy by any chance? Do you know?
He does, yeah.
He does, and they declined it.
Yeah, Hiscox Insurance, which is a good insurance company.
Right.
They sent him a letter saying they are 100% not going to pay a penny.
Wow. Well, the damage to the building, I wouldn't expect them to pay it, but the contents, and
right,
your business property and stuff, or his business property in this case, that normally would get covered.
Right. Yeah. I don't know. He's on the phone with him now, so we'll see. But it's a strange situation.
Yeah. Well, the only thing I can say is sometimes the first no doesn't mean a no. It's just an effort not to say yes right away. So
right. Yeah. I got it. I'm just watching this, and it's just strange.
Yeah.
Because it looked like a really good policy, but they flat out denied him.
Yeah, that's incredible. Yeah, we're going to see a lot of that. Unfortunately, there's a lot of, because we had 2 hurricanes.
There we are.
There's going to be a lot of push back and forth in between companies, by one company saying, no, this was created by the flood. And then the flood company is going to say, no, this was created later on by the hurricane and the wind. So there's going to be a lot of back and forth, and properties that got damage on both storms. That's going to be tricky there.
Yeah.
And Mike, going back to your question about how to get people to show up. Like, let's say you're trying to get your drywall out, and you get this company's coming out, and the numbers are all over the place. What I've been hearing is around $3.50 for drywall only, and then another $3.50 if they have to take the flooring out. So about $7 is what the insurance companies are going to be looking, or at least I've been told that about $7 a square foot is a very acceptable number. And then obviously if there's equipment that is going to be left there, then those are add-ons. But if you get a 1,000 square foot home and someone comes in and says, well, it's going to be 15 grand, that's completely off the chart, basically. It should be somewhere around that ballpark of 5 to 7 grand from what I have been seeing.
Okay, so to get the drywall out and the flooring out, we're looking at about $7 a square foot. Doesn't matter what kind of flooring, any kind of flooring, carpet, tile.
It doesn't. Obviously, if it's carpet, it should be cheaper. But
Yeah.
that's what the insurance companies are, and now this is coming from a third party too. So I don't want you to hold me to this 100%.
It's not
Oh,
the
we won't.
Bernardo.
I've been told that the adjusters are looking at it and saying if it's at $7 or around that, they don't even play around with it. They just
Okay.
accept it. Now, if it's $15-20 a square foot, then that's a whole different ballgame.
But Bernardo, that $7 a foot is still got to be a receipt supplied by a licensed contractor, licensed and insured. Are they going to pay the homeowner that?
No, it'll have to be. I mean, in order for the adjuster to take that in consideration as a service that the homeowner hired, it'll have to
So
be.
when they're pricing it out,
Yeah, it can't be
okay.
the neighbor, that did it and charged that
neighbor's
much.
going to be minimum wage, like
Right. It'll have to be someone
Got
that is a true contractor of some sort.
Okay.
Now, how they're going to push the brick paver guy taking drywall out versus the drywall mitigating company or dryout company, that's a whole different story. But at least from a labor standpoint, you don't want to be paying more than that to anyone, really, including the big guys. So you don't have pushback.
Bernardo, I'm going to ask you a question outside your wheelhouse, probably 100%, and just look for your opinion on it. But you've had 36 inches of water come in your house. You got, the $7 a foot to get the flooring and the drywall out, and maybe you've lost your AC, and you got to obviously redo the plumbing, the electrical outlets and stuff. Maybe a panel. I don't even know. We're not going to get anywhere near that 50%, are we? I don't know. I mean, it all depends on a lot of things.
In my particular case, I think we're going to be pretty far from it because it's all basically trim work, right?
Yeah.
I think the biggest things in my case are going to be cabinets, and they're only going to pay kitchen cabinets.
Oh, I forgot the cabinets. Yeah.
Yeah. So that brings another thing before I forget. So if your cabinets got completely destroyed by the water, your granite's waterproof, right? So don't break the granite and say, well, let's go ahead and get new granite, because they are expecting you to call a granite company and have them come over and remove it and lean it against the wall, put it back on. Or if you want to replace it, then it's going to be on your own dime, basically. So that's something that a lot of people called on. Now, if the cabinets collapse and the granite breaks and you can document it, it's a whole different story. But if it's just cracked because the granite guy broke it when he was trying to take it off, or you just went with a hammer to it, that's not going to get paid for sure. And a lot of people are assuming that the cabinets would come with the granite or countertops.
Yeah, I'm going to play devil's advocate here too, but those granite people are like gemologists, and getting one of them to come out and remove your existing granite and lean it up against the wall and wait for the new cabinets and call them, that's probably another year waiting list you're on too. I mean,
it can be. I called the granite guy that I normally use. He charged me $500 to come over and remove the entire kitchen and bathrooms. And then he said it will probably be about the same to put it back on. And the insurance company will pay for that. They will pay for the removal, and they'll pay for the for the reinstall. They just won't pay for a new stone, basically, unless he actually broke.
Right. Okay. Yeah, this is gold stuff, Bernardo.
Yeah.
Getting to talk to you is really insightful, and not only you're kind of like the club I'm in, the Hair Club for Men. Not only are you the president, you're also a member, because you're dealing with your own. You're dealing with your own issue, and you're the insurance guy.
And to be honest, I mean, I don't want to say I feel fortunate to be going through it, but it is kind of nice in a way to be sitting on everybody else's seat right now and hearing all the pushback from the insurance company and all the stuff that my clients are dealing with. I'm actually feeling it. And I had multiple properties for many years. This is the first time I filed a homeowners or flood claim. Right? Really, I didn't file homeowners, but so it's interesting to experience from the consumer side of it, and be able to share the professional side and the personal side of it. It's very frustrating, for lack of a better term, on both sides. But it kind of is what it is. We just have to make the best out of it at this point.
Yeah. So when you're mentioning, people, clients, or as we're agents, we're going to have clients calling us for advice and things along those lines. And if they're getting a lot of pushback from their insurance company, or I didn't hear the conversation with you and Donald, but sounded like Hitchcock was denying a claim. Would that be a time when that homeowner should possibly reach out to a public adjuster and see if they can help them?
Yeah, if they push far enough and they're not getting anywhere, that's probably the time to hire a public adjuster. This is something to be researched on, but when there is an emergency situation, I think the public adjusters' fees get reduced to a max of 10% versus up to 20%. I think is the standard, if there is such a thing. So
I
that's something
think
to
that
keep in mind. Is make sure you're not getting gouged by the guy who's supposed to be helping you too.
Yeah.
right.
You
I
know,
think you're right, Bernardo. I have a friend who's a public adjuster, and that was kind of he confirmed that after Halloween.
Do they make
yeah.
10%
I think
off of
normally
the
it's up to
total claim?
20%. I'm sorry.
They make 10. It'll be 10% off the total claim, or the difference
Correct.
between.
Yeah,
Yeah,
10% of the total claim.
Yes.
Okay.
Yeah.
Interesting. Now, if you were at that situation, which we've seen all the horrible news reports and all the insurance crisis stuff before the storms came, would it, like let's say you logistically have $100,000 claim and they come back in at some number like 8,000 or something, and you're having, which we're seeing a lot, by the way, we have. And we're seeing, would you go right to public adjuster, or would you just go, I'm going to get an attorney and let the attorney tell me which public adjuster they want?
I would talk to an attorney
Okay.
if you have the option to do so, because it may get to the point where the public adjuster is going to need the attorney, and then at that point you might as well have both of them on your side, and an attorney and adjuster to work together, so you get a better result.
And
I would go to the attorney first and just kind of start it at that spot.
in any situation like that, Bernardo, is before you seek out an attorney, is like the insurance consumer helpline or the insurance fraud hotline helpful, or no?
There's the Department of Financial Services is basically the DPPR for insurance.
Yep.
They have investigators and people to assist with this kind of stuff. They get a lot of crazy requests from the public, and things that they think was unfair, and in reality it's just how it is. So I don't know
Right.
how easy they're probably completely overwhelmed.
Yeah, I'm
Uh,
inundated.
I mean, that's one place to start, but I don't know that you get, a whole lot out of it. I would definitely do it because it's free. Start there and then kind of work your way from there up. I had a situation once where I had a contractor that was asking me to backdate a certificate of insurance, so
Mm.
it would make his life easier on an audit that he didn't have his paperwork in order. And when I told him that I wasn't going to backdate it because that would be illegal, in my opinion, he made a complaint to the state. It took the state a month and a half to reach out to me after he made the complaint. And then they reached out to me, asked me for paperwork, and I sent them all the paperwork. And then it took a month and a half for them to call me and say, "Yeah, you were right. Don't worry about it." I mean, it's crazy, and that
Coming
was
fast.
over a piece of paper. It wasn't even a claim. It was just
Right.
this guy was looking for a paper that didn't exist. He wanted for me to create it, basically. So I don't know that that's going to be the best way, especially in a situation like we have right now where people need money right away.
Michael,
Yeah.
hey,
Not to switch gears or anything, but obviously we're going in. We've heard a lot about what they can do with insurance claims when it comes to that homeowner that's got a mortgage and now they're displaced and things along those lines, and they got a mortgage payment they got to make. They got to
new place
go
they're trying to rent.
they got to go find a place to rent. Hopefully, insurance will come in and help them with that. But my question is more to Michael Cochran. Will you see a lot of mortgage companies offer some type of forbearance for the time being?
Absolutely. I got an email personally that says, I'm trying to pull it up now just for reference. Just like you, Bernardo, as a industry worker, as well as someone that's experiencing this, seeing it from both sides is interesting. So I got an email from servicing on my mortgage, and it basically asks if I was impacted and if I wanted to request assistance, if I needed short-term assistance, if I needed payment assistance. The email has information for the Red Cross, FEMA, talking about short-term assistance, talking about payment relief, where what they probably will be doing, which they did during COVID, is put the payment on the back of the loan. So they'll defer the payment for a period of time and then put it on the back. This information will come directly from your servicer, and you'll get an email or something in the mail. You can reach out yourself on your mortgage statement. There's a phone number you can call in and ask what your options are. But the most common is going to be just being able to have payment relief and avoid payments. I don't know how much proof they're going to want, or if it's just, if your county is impacted, they're just going to take that information and allow you to avoid making payments. It should be pretty efficient. I don't think you're going to get a ton of pushback. I mean, especially with everything is coded with counties and zip codes and so forth. I think if you ask for it, you should be able to receive it pretty easily. I wouldn't just not make a payment. You definitely want to make the call. You want to get their permission. You want to get it in writing. You want to get whoever you spoke with to get their name and phone number, their contact information, if they have an ID, or they could send you an email to confirm. I would definitely make sure you do a paper trail, because it's no nonsense if you don't make a payment for 90 days. Your home can go into foreclosure, and then you're tied up in that. Even if you made that phone call and don't have the paper trail, you definitely don't want to be behind the 8 ball on that. It'll be hard to get everything out of that, get that straightened out.
And go ahead, Michael. Sorry.
On the obviously, we're still in a scenario with everybody on this call. Everybody that we serve, our clients and so forth, they're just dealing with devastation. But start thinking about what they're going to do for housing in the future. Some of the homes are not going to be able to be rebuilt. Some of the people that were impacted were in apartments and rentals and so forth, so they were going to need new homes. FHA has what's called a 203H. The most common loan, if someone comes to me and says, hey, I want to buy a home, I'm a first-time home buyer, maybe they don't qualify for down payment assistance. The most common loan is called a 203B. The renovation loan is called a 203K. The one I want to chat about just for a second is a 203H. So the H is the relief loan, and what that allows you to do is 100% financing if you are in an impacted area. So if your area was federally declared impacted as a disaster, which this is, then you can buy a home with 0% down through the FHA 203H. So when your buyers, when your community is ready for that next step, before they sign a lease or really get committed to something else, that's an option for them. If I were them, I would definitely look at, because if your home's not going to be able to be repaired or rebuilt, or you're a renter, this is something that's very favorable to take advantage of.
Michael, would you think that the 203H, the criteria for the area being impacted would be the 34 counties that were declared a major state of emergency, or what would be the criteria to figure out what an impacted area was?
Great question. So if you look up, and this is basically off of HUD. So HUD is part of the government, and it just says it must be your primary home that you're purchasing. It has to be. You must own a single-family home that was damaged or destroyed in a presidentially declared disaster. So I believe as of 4 or 5 days ago, it was declared by the president. Am I correct on that?
I believe so.
And that is the criteria. So you just got to make sure that they lived in an area that was impacted, that was presidentially declared, which obviously the area down by you guys is for sure. Now, how far that stretches out, I don't have an answer to that. I can definitely get that. But it should be pretty common sense that if you're in an area that was significantly impacted and is federally declared, then you're going to have availability to this product. There's probably going to be nuances within that, other little caveats, but anybody that had their home destroyed, or they were renting a home that was destroyed, or an apartment that was destroyed, they should qualify, which is pretty cool.
That's really sorry.
No, go ahead.
I mean, that's a phenomenal program.
Yeah.
Never knew about it. But I got to open up, maybe Pandora's box here a little bit, just to ask. This homeowner that has a damaged home or destroyed home, more than likely they had a mortgage on it, right? Insurance is going to pay what it's going to pay. But if they end up having to short sell it, which I assume is going to damage their credit, because I would assume in order to do a short sale today is going to be the same way you had to do it a long time ago. You got to miss payments. You got to have, you got to go through that. Your credit's going to be damaged. How would all that play out for that buyer?
Well, that's a great question. So there is going to be exceptions. So there's a short sale waiting period, and those are usually designed for those that put themselves in positions where they overextended themselves. When it's a natural disaster, something that is catastrophic outside of their control, that is viewed completely differently. It's going to be able for us to make an exception. Now, it is going to affect their credit score if they don't make payments. So that's why earlier what I said is very important, that you make sure you're talking to your servicer on what's agreed upon. Because if you can get them to agree to defer your payments, then it's not going to affect your credit score.
Michael, I want to jump in really quick, and I'm sorry because this kind of goes along with getting your mortgage payments deferred. Your people, your friends, your clients who have HOA fees, those have got to be paid too, because I'll tell you, your homeowners association will put a lien on your property before your mortgage company will.
Mhm.
So talk to your management companies. Are they going to allow for a deferment for your monthlies? I mean, annual fees, that's going to be a whole other thing. That's not going to happen till January. But your folks with monthly fees that had, catastrophic loss, or, whether it's a home or a condo or whatever, talk to your management companies.
It's a good point, because I know property appraisers are doing some things too for you on your taxes this year. So contact your county appraiser and see if you can't get that. I think they're not just deferring it. I think they're going to, they could possibly waive it for the year. So I'm not sure, but I know that there's resources
Property
out
taxes.
there. Yeah, on your property taxes. Michael, I know you're in the middle of a good point, but man, you led up a whole bunch of new
Sorry,
questions out of that. No, so, as taken off from what Amir said, let's say I get in forbearance, get that paperwork done, and you do need it done. There's paperwork going in and paperwork coming out. You can't just decide to stop paying and pick up paying anytime you want. If I'm in forbearance, can I still qualify for one of these loans and get a short sale on the backside and all of this? There's a lot of moving parts here. You following me though? I got a mortgage. That house has been ruined. I know that I can't build it back up because it's prior to whatever dates, and I'm not going to move it back up. I've got that mortgage in forbearance. Now I'm looking to put this 203H in play. Talk me off of this one.
So every situation is going to be different in the aspect of what stage it's in and being able to be determined whether it's toast or not. Because if you're saying that you have an insurance claim and the loan's in forbearance, is there possibility that that home is going to be put back together? So that is a piece of the puzzle. If the home is destroyed, then 203H, it's a good to go.
Okay.
Now, depending on where you're at in that situation, if it's deemed destroyed, that it's not going to be rebuilt and you're just waiting for all of this to clear out, that's a little bit different than if you as a consumer and the company, the lender and the insurance company hasn't made a decision yet, then I don't know if they would be eligible for that at this point. But you're definitely eligible for it if it's destroyed, it's not going to be rebuilt. If you're renting and it's destroyed and you can't move back in, whether it's an apartment or a house that where you were renting, if it was me, if I was a consumer, I would just present it to the lender as it is being destroyed. It is destroyed, and go down that path until, unless they discovered something to prove other than that. I don't know if I would necessarily say I'm unsure, because I don't know. As I'm thinking through what you're saying, I don't know if we're going to go by the county and photos, that should be enough. I don't know if we're going to really get into what your negotiations look like unless you tell us.
Okay.
Sounds like the full-on case-by-case basis.
Yeah, and
Sure,
we're
yeah.
asking some very nebulous, open-ended questions and trying to get answers from you. I give you a
Michael,
lot of problems.
stop.
I'm going to
What
throw you a
again?
curveball here. in a
And
second.
perhaps,
What happens? What happens if someone has a loss that is not a total loss, and they have a mortgage? The insurance company is going to write a check for the repairs. They'll have to normally be endorsed by the lender. That's a pretty easy scenario, right? The lender will endorse it, pay the contractor, problem's done. Now, in a situation where the home was completely destroyed, and let's say they have $100,000 balance on it, on that particular mortgage, would the lender allow them to keep the property, keep paying the mortgage, and rebuild it, and they will endorse that check back to them? Or they're going to force them to pay off the loan since the collateral is not really there anymore? You know the answer to that one, or?
I don't.
That's nothing, right?
We got it. Stump the broker.
But I mean,
No.
that's something to kind of for all of us to kind of look into, because we may have someone that owes 100 grand, and now they're going to get 250 grand, and that 250 grand can put a decent dent on rebuilding. If the lender takes that 100 grand and say, hey, listen, the collateral is wiped out. Here's the you have to pay us off. I don't know if it wouldn't be a do it sale because it's not a sale, but
No, the lender is going to want their portion of the loan, especially if the homeowner received. In your example, are you saying that they owe the lender 100 grand? Is that your example?
Right. And the payoff is
And you got 250.
Yeah.
Yeah. Then I would say the lender's going to want their 100 grand, 100%.
So
then that leaves the homeowner with
150 grand.
to
yeah.
to
So you can
essentially
put the house whole.
sell the land,
Yeah.
or put the house whole, which you probably can't for 150,000.
Right. And move on with your 150 grand.
So Bernardo, what I look at is, solving people's problems out there. All you got to do is walk one of these zip codes on the coastal communities. You probably get 10 listings before you get out in the neighborhood, trying to help people out if you're caring and really have the right intent. So let's say we're at one that the municipality, like your one in Dunedin, is not going to let them put it back without rebuilding it. But you're not a total loss. You can go in there, cut some drywall out, put this thing back together. So I'm looking at two different buyers. I'm looking at the potential investor buyer that's going to buy it for the land only and build a spec home there. They're going to build it to today's code. They're going to want retail value on it, retail purchase price. I'm also looking at the fix and flip of the existing home is not in the scenario here, because to flip it, you're going to want to retail it. To retail it, there's a loan. The loan, you got to have insurance. That's not going to happen. It's going to be uninsurable at that point, correct?
Well, I think to rehab and flip it, you're going to run into the issue of exceeding the 50%.
Right.
And you're not going to get any permits, so you're not going to be able to flip it. You're not going to be able to rehab it to flip it.
So that's
can't
my
get a
point.
builder's policy?
Is you have a different investor now. Your investor is potentially somebody that comes in and looks at a long-term rental hold. They can come in there, pick this property up. So they're an investor, but it's a rental hold. It's not a flip, because they're never going to get insurance on this property. If you can't insure the property, you can't retail the property. You're only looking to sell it to wholesalers.
Yeah, no, but I think the first wall, and the one that would be really hard to break through, is getting the house rehabbed properly. Properly meaning getting
It's never going to be
Like
done
built
properly.
out. Yeah. It's
I'm
not,
talking, you know what I'm talking. I'm talking the investor that's going to come in, give somebody a little premium over it being just vacant land.
Right.
Because there is a structure, and they know they can go in for 40 grand, 50 grand or something, and
Okay,
cut the
I see what
drywall
you're saying.
out, scab it back together.
Just kind of slap it together and kind of make
They're
it.
not going to pull any permits. They're just going to want to rent this thing. Problem is, they're stuck with a property that they can never really resale, because you're going to run into
Right,
permit
correct.
issues. You're going to run into a lot of unpermitted work, those issues, and an insurability problem. I'm sure there's some kind of national database with the insurance companies out there
Oh,
that
for sure.
plug in an address and go, oh, no, we're not writing insurance on this property, no matter what it looks like today.
Yeah.
So-
No, that's definitely a
So you're looking at an investor here that if they really spend any more money than vacant land value for that home, it's just a temporary rental type of fix, correct?
I mean, it is, but it could be very profitable, right? From an investor standpoint, they can probably make some money on it.
Tweaking your interest over here, Bernardo?
Well, I'm just saying there will be those people out there because that's going to be profitable. So a homeowner may be able to get a little bit of a premium on raw land versus land with a structure, and they may get, I don't know, 5-10% or whatever, because even by paying that extra 5 or 10%, which is beneficial to the homeowner, that investor can still make a profit on it. They can still make a return on it. So we'll have to see. Now, how is the city going to look at it and say, well, okay, well, I want to make sure this thing was dry out properly and there's no mushrooms growing behind the drywall. That's the tricky part. That's I think where things are going to get sticky, because
For code enforcement and the variations of
Right.
code enforcement from municipality to municipality.
And in Dunedin, it ain't
I'm
gonna
afraid.
happen.
Yeah, I'm afraid that
I'm gonna,
You know how aggressive
the
they are.
city's going to step in, or the county's going to step in and say this particular home has been brought up to our attention, and we're aware that it has to be torn down. So
It's-
they're
I
not.
think
They're going to condemn it.
And I think
I'm afraid they're going to
investors,
condemn it before you can do anything to it.
sellers and agents are going to have to embrace this and understand that if an investor does give you a premium whatsoever for a structure being on the property, that they're really still buying it just for land value. Because I could see an investor come in, rent it out for several years, maybe until the market changes. Right now, there's a major demand for rentals. And they could say, you're right, maybe they paid 10, 20% more than just land value on it. But eventually, for them to retail it, they're going to have to knock that building down and build it back to different.
Right. I think you're going to see when you talk about the municipalities like Dunedin, I think you're going to see all the municipalities being on the spot now. I think they're not. They're going to be much more aggressive.
More money for them.
Here's where the municipalities and the county kind of get, they're being held up by a higher power to apply a particular rules. Is in order for us to qualify for flood insurance as a community or as a city or as a county, we have to follow a particular set of guidelines. And one of the guidelines is if it's more than 50%, it cannot be, it has to be brought up to today's specs. Right. If the city starts allowing people to just not have insurance, not have permits, and go in there and live there, we're kind of breaking that rule. And we could lose, basically that particular city could lose the ability of getting flood insurance.
Yes.
So the pressure on the municipalities is coming from national flood.
Sure.
Correct. So they have to follow the rules in order for us to qualify to get insurance from the national flood program.
Gotcha. So we have quite the enigma.
Yeah.
Yeah. We have a lot going on.
Got to wrap it up here shortly.
Yeah. We do.
Michael,
you got a last thought? Bernardo, you guys got last thoughts?
I think all the answers to what we have been going back and forth on for the last hour would probably be very easily answered by people down in Fort Myers that dealt with that 2 years ago, and people that dealt with it. So this is not the first time this happens. It is the first time it happens to us. So we may want to reach out to our brokers down, in the areas that got, destroyed in the last 5-10 years and see how they went through it. It's completely new to us, so we're like, how are we going to deal with it? But they've been through it.
Yeah. It's not new to everybody, just new to us, fortunately. And again, as we started this thing, we've had 2 100-year storms in a 2-week period of time. I mean, like I said, if I'm a gambler man now, I'd go buy waterfront property right now and say it can't happen again. I could be severely wrong with that too. Michael, you got some closing thoughts, and then we'll do a quick little housekeeping here and tell you guys what we got coming up.
No, any loan that you have with a current lender right now, just remember that they're going to want to do a post-hurricane inspection. They're going to want to see photos that the home is okay, and the certification that you believe the home is okay, and then you'll still be allowed to close, and they'll do a post-hurricane inspection. For example, we have loans closing today that the appraiser hasn't gone back out to do an inspection, and we're getting photos from either the agent or the buyer or the seller with time-stamped, and then certifying that the property is still in okay condition and we're able to close. So we're trying to keep the world turning the best we can under the circumstances. And if there's anything my team or myself can do for you or any of your clients, in the community, if you need us to cut down trees, we're willing to roll our hands up and get dirty and help in any way we can. So prayers are with all of you and all of your sphere and families, and hope you guys are putting one foot in front of the other.
Appreciate it, Mike.
Right back at you, Michael. So just along the lines of what Michael was just talking about, we've got some loans closing today as well. Every lender is a little different. I have one that wants an actual person to re-inspect the house before we close. So it's going to case by case basis. So again, we're trying to keep the world turning like Michael Cochran and his crew at CMG. We've got loans closing today. We've got some on the books for next week. Everybody just, be patient. We're going to make a move as quickly as we can. But I'm sure as Michael, the backlog is there. Yeah. We've already got stuff that was delayed from Helene that's kind of jumping in front of some of the other ones. So everybody be patient.
Yeah.
Calendar, well, the calendar. We have a buyer's agreement forms class that's supposed to be on the 17th. That's canceled as of right now. Everybody's got a lot of bigger fish to fry, a lot on their plates. Also on the 17th, Michael, I think you had AIO loans. Is that something? Yeah. That's postponed, right? Yes. Okay. On the 29th of October, Bernardo and Michael, you'll want to note this. The pro panel class is going to be canceled. we'll let you know if there's a reschedule another day or whatever, but we're gonna cancel that. And then on a positive side, October 22nd, 10 a.m. agent orientation is happening. It's in-house.
That's right. We're going to do it.
So I have a thumbs up there. Everything else is or wait.
Yeah. Hey, Michael and Bernardo, on that orientation, we're going to shoot a quick little video that day. I don't know if Bernardo could be here or Michael for that matter, but if you can, we're going to do a little video orientation for people so they can't be here. So have your best 3 minutes, 4 minutes, and we'll put you on video and make you famous.
There you go.
Do your hair the night before.
If it's okay.
What was that, Renato? I didn't hear.
I'll make an effort to be there in person if that's better.
Okay,
We
yeah,
would
if you
love
can, that would be awesome. If you guys can, like I said, we're gonna shoot our staff when they're doing it, and Tina's gonna be there, and you guys did. We will say the 29th Pro panel that has been canceled. We're just gonna substitute it out with one of these Zooms, and we're gonna get some more people on this panel. We're gonna have an appraiser with us this time. Probably somebody from Stellar had committed to be with us, Chris Lumia. So we're going to reschedule it to that as soon as possible.
It's a date to be determined.
Yes, it's a logistics thing. We don't want people to try and have to get to the board and all that. We'll just put it all on Zoom, and it'll be promoted and be much more attended. And we'll give the agents and people enough time to try and get their lives back together enough to to jump on that.
And you guys don't forget, your friends, yourselves, your family. There's a lot of resources out there. So
Yeah.
Just a quick search anywhere. I mean, there's assistance for food, financial assistance, insurance, free bus fare, laundry stations, cupper stations. It's out there.
Yeah.
It's all out there. Just
And for agents, don't forget, Florida Realtors has a disaster relief fund for agents.
Yeah.
So don't be afraid to tap into that. We pay into it. Now's the time to get some of that back.
You got it.
So, all right, guys.
so I will see you next week then.
We'll plan on seeing you guys all next Wednesday, 10 o'clock. Same bat time, same bat channel.
See you guys.
Thanks, Bernardo. Thanks, Michael.
Thanks, guys.
See you guys. Bye.
Bye.